Hello guys, welcome back to another Lumley trading video. In this one we are going to be analysing GNS. We're going to do this from a technical standpoint. Now just to note, this was recorded on the Thursday, so yesterday. Reason for that is we're just making this video in advance. So again, price might be a bit different tomorrow, but over all these levels will still hold no matter what way it goes, and that's why we provide both support and resistances. So it doesn't matter if you're watching the video a week or one day down the line, it shouldn't make a difference because the levels are still the same. So obviously today, so obviously yesterday, there's a big move on it. We're up 40% as we're recording this video, but really a big move pre-market. You can see it's obviously pulled back from that high, hasn't been able to break it, at least as of 12 o'clock on the Thursday. So why is this key? What am I paying attention to? So as always, we're pulling up the standard deviation channels on the left with a 6-month chart, on the right with a 1 year, and it's really just starting to come to the top of where we can really expect it going. So 820, this is our third deviation on 6 month. Obviously the first time we're hitting these kind of levels, I'm looking at it short bias. Expect a pullback really at the minimum at these again can catch the reversal levels, but at a minimum we expect them to be reversal level pullback levels. If it broke that, we're looking then at 10.15. breaking through there would be $11, and a final level taking us out to around $13.60. So really all four of these levels, actually the 820 has been hit, so we'll go over that in a sec, but the other three then, 10, if it continues to the upside, I'm looking at 10, 15, $11 and 13.60. The first time it hits these levels, really I'm just looking at short bias trades. Never looking to take it. Even if it tries to break out of them, I'm not trying to take it because there's a lot more risk to me than there is reward on trying to trade at long bias through these levels, and instead I just look to play the pullback. So what we can see, we had all this strong momentum pre-market, came straight into this level and instantly reversed as we came in here. And again, the reason for that is just this is where, if algorithms are triggering, this is where they are triggering, because again, from a standard deviation, a statistical thing, which is usually how algorithms work, that to them is now very overbought. So if they were long, they were locking in profits, and if they're not currently holding a position, they're most likely entering shorts at these levels. And that's really why I trade off these levels, because they just tend to, be really accurate. You can see we've been doing this strategy, I think, for over maybe 2 years on this channel, and there's a reason I've stuck with it this long, and it's because it just works so often. And again, you can see that's kind of where volume peaked, and since there obviously a decline in volume as algorithms most likely aren't triggering as often. So I'd be watching for that retest. Again, if we re-come into here, I'm not looking to hit it short again because it did trade that pre-market, but this can signal us as a long bias. And how do we do that? We wait for the 820. If it breaks, meaning we go above, we want to see a retest this as a support, and if it holds, then that's when I would be flipping a bit more long bias. Probably won't be taking it long, just because again, if I'm trading small caps, I prefer trading at short bias. So really I'd be waiting just for more of that break up to around $10, 10.15, and that's where I'm looking at it a lot more short bias, and again looking for the same thing if it ends up going to these two levels as well. So now quickly then to get onto the supports, what are we paying for if this is the actual reversal level, or we just get kind of a strong pullback? So we do have a support at 650, we have one at 545, so basically 550, 306, 269, and really that's all I'd be paying attention to, because past here, obviously our statistical means turn negative, and this is basically fair value. So really as well, it's always a warning sign when you see a stock with the statistical means both in the negative, because what it tells you is the stock has had a strong sell-off overall. If you zoom out, you can see, went from $36 down to 30 cents. Strong sell-off, and overall just weak from a technical standpoint. But usually if it's from a technical standpoint, that kind of harsh of the deviation to negative, it usually also means there is a fundamental issue with the company. So those would be the supports, and obviously you can be paying attention to 208 is a gap fill location, so if it did come back here, wouldn't be unlikely to see a bit of a bounce. But overall, we do tend to pay more attention on the actual statistical deviations. So again, that's what I'll be paying attention to, and that's what you can kind of see happen as well. Came back pre-market, did the move pre-market, pulled back also pre-market, and then straight into the open. Big volatility spike. Again, this would just be from orders left out yesterday. Some stops, some buy orders, and then come down, retested this support level. It held, and then we got a good bounce. So it's kind of confirming this level, which makes me kind of think it will retest this 820, and that's why I mentioned that when we're talking about resistances. If we do break though, come back down to 650, we break below it, then 550 is going to be that target, and then so on and so on. Anyway, I hope you enjoyed the breakdown on GNS. If you did, why not drop a like and subscribe and check out this analysis video.